I've increased my investment in ETHZilla to almost $9 million because the company has never been more undervalued. In this video, I'll go over how to properly value the business, latest news on ETHZilla's tokenization business, and what to watch out for in earnings. At the moment, ETHZilla owns almost 94,000 Ethereums, worth approximately $300 million at today's market drop value, and just under $600 million in cash and equivalents. This equates to roughly $59 per share in assets. Now, the company also owes over $500 million on a combination of convertible notes, prepaid warrants, which add up to roughly $33 per share in liability. That means that even after Ethereum's 25% drop this week, and at the moment of taping this, it's around 3,100 per Ethereum, this gives a net asset value of roughly $26 per share by my estimates. Therefore, at the moment, ETHZilla is trading at a discount of over 35% to net asset value. This is with the company being profitable, of course. We should also keep in mind that this net asset value is expected to grow. Last week, management, in a brilliant move, agreed with my open letter to start selling Ethereum in order to fund its share buyback program until the net asset value discount normalizes. They sold 10% of their Ethereum for $42 million at over $4,000 per Ethereum and started buying back shares immediately. Now, given that they sold Ethereum at $4,000 per ETH and are buying back now with a near 35% discount to net asset value and Ethereum being at 3,100, they are effectively buying back Ethereum per share at 2,200 per ETH. This implies that on this trade that I was urging them to do to sell Ethereum to buy back shares at a discount, ETHZilla is making a near 50% profit on the $42 million for the shareholders. By the time they're done deploying this initial $42 million on share buybacks, and they have only so far announced that they have bought back for $12 million at around $20 per share price. By the time they're done fully deploying this, they will have increased net asset value per share by around $1.30 per share. And at the current share price, that is about 8% of the current share price. So within 10 days, by doing this buyback program and opportunistically selling Ethereum, they will have had increased the net asset value per share for every shareholder by 8%. And this is the largest net asset value share growth out of any digital asset treasury in that time period, and even October alone. If you look at all the other digital asset treasuries, they are absolutely all stuck at the same level because they're not pursuing buybacks and they are not able to buy more Ethereum and sell more shares because they're trading at a discount. The only exception is Bitmine, but Bitmine is earning less of an increase on net asset value per share than ETHZilla is doing now with buybacks. So today, not only is ETHZilla trading at the highest discount with around 35%, it's also the only one actively pursuing buybacks, and it is the one producing the more Ethereum per share growth out of any treasury. So this was a really brilliant move that they have also arrived to independently, and why I was urging management to make it in the first place. And it's already bringing very significant results to shareholders because if you look at the stock price, when they've started doing this, the share price was roughly $16 per share, similarly to what it is now, but Ethereum was over $4,000. Now Ethereum is nearly $3,000, but you're still at $16 per share. That is the effect of those trades that they are making, and of them responding to this call to actually act in the best interest of shareholders, which I'm very glad that they did. And it is why I've increased my position in ETHZilla to over 3% of the company now that I know, and they've shown that they're extremely shareholder friendly and looking at increasing the net asset value per share for every shareholder. Now, other than the near $20 million trade profit that ETHZilla made for this perfectly timed buyback program, there's also many developments on ETHZilla's tokenization business that need to be known in order to properly value the business that are perhaps more important. Securitize, a direct competitor of ETHZilla's tokenization business, is going public at a $1.25 billion valuation. Similarly to ETHZilla, it has access to all of the necessary tools to tokenize real-world assets, including SEC approval and all of the technology. It currently tokenizes $4 billion worth of assets for various funds. However, in a key difference with ETHZilla, it does not own the tokens. It only provides tokenization as a service, acting only as the technical layer. Whereas ETHZilla invests its own capital in real-world assets that it tokenizes and then sells those tokens to receive revenue. That is how the ETHZilla's business model will work. Now, Securitize's IPO is important because it puts a market value on the technical capacity of ETHZilla to tokenize assets. If you consider Securitize manages $4 billion in assets under management and is worth $1.25 billion, then the $500 million that ETHZilla has earmarked for tokenization values its tokenization business at 1/8 of what Securitize is worth. And based on the current share count, that means a value of $10 per share in the current state of ETHZilla's tokenization business. So if you add that into the current stock price and say that this is what it's worth, the $10 per share, the tokenization business, which is what the market is telling us it is worth based on Securitize, then it implies that the digital asset treasury part of the business is actually trading for $6 per share, which would be an 80% discount on net asset value, not 35. Differently from Securitize, ETHZilla is vertically integrated. It acquires real-world assets with cash, then it issues tokens that match the fractional ownership of the cash flowing asset. It sells those tokens in the market and uses the proceeds from the token sale to buy new real-world assets, creating a new token, and so on. Given that ETHZilla has $500 million in cash earmarked for just this procedure, it would need to repeat the process I've just described only 8 times to catch up with Securitize's assets under management, and that's without any separate deals. Because in addition to acquiring its own assets and tokenizing them, ETHZilla will also compete to bring in external funds on chain through their infrastructure, which will help them close this gap quicker. But as opposed to Securitize, they can achieve this independently, as I just described, by purchasing their own assets and doing it over and over again without having to find clients to bring them on chain. When ETHZilla is able to catch up to Securitize in assets under management, and given the current valuation of Securitize's IPO for tokenization as a service, this would value ETHZilla's tokenization business at also $1.25 billion once they've grown 8-fold the amount of assets that they are tokenizing. And this would give roughly $40 per share post the conversion of the convertible note. This valuation would actually be on the low end, as Circle, the issuer of USDC, trades at 156 times earnings and a $30 billion market cap. And the product ETHZilla is making in tokenizing loan portfolios is essentially very similar to a high-yielding stablecoin. So what is ETHZilla actually going to be tokenizing? Today, ETHZilla tweeted about the benefits of a tokenized commercial property as opposed to a real estate investment trust. This suggests one of the first assets they are going to be tokenizing is commercial cash yielding properties or residential. For clarity, in this case, if Zillow would buy a residential or office building, then issue a token that is a percentage of ownership of that building, and then monthly payout income distributions of the rental yield would be sent out to token holders. Owners would be free to trade this token like they would any other cryptocurrency, and all of this will run on Ethereum. This is not theory, this is the technology and the approvals that ETHZilla already has to launch this, including the capital to deploy. Now, in a recent interview, ETHZilla's CEO also noted that they were looking at tokenizing portfolios of auto loans and credit card loans, typically only available to institutions to purchase as a whole or through a fund. They're also therefore working on this. This works in this way. If Zilla buys a portfolio of credit card loans or auto loans from banks, and these typically yield a very high interest rate, anywhere from 10 to 20% once you factor in defaults. Then a token is issued that is a percentage ownership of this portfolio. And interest payments are distributed to token holders in USDT or actual US dollars through Liquidity.io's platform. Now, all of this, which sounds fairly obvious to do for investment management, didn't exist before because the technology was there for a long time, but the legislation didn't allow it. It is only recently that the Trump administration passed a series of laws like the Genius Act that allows for projects to do this, and that the SEC has started taking steps and granted approvals for such projects. So ETHZilla's tokenization business is very real, despite it currently having a zero valuation based on the stock price. Now, the final and perhaps most important point is that ETHZilla not only provides this technology for others, it has a capital, once you count in the conversion of its convertible note, of nearly $1 billion that it invests. Nearly 300 million is invested in Ethereum, which itself is invested in three different decentralized finance protocols, yielding from 8 to 10% API yearly. And the $600 million cash, which is currently mostly locked up until the conversion takes place, is currently earning interest on treasuries. But once it gets tokenized, it will be deployed into real-world assets that generate roughly 10% and above interest per year across private credit and commercial real estate, like I've just said. This means that on its $1 billion balance sheet, which is free of any liabilities post the convertible note converting, it will earn roughly $90 million in pre-tax income, which will translate after the conversion of the convertible note, so fully diluted, to an earnings per share in the range of $2.50 to $3 by those estimates. Now, typically, a company that is valued at 20 to 25 earnings, 25 times earnings, would give a valuation to ETHZilla of roughly $60 per share based on those earnings per share projections. And we are going to get those projections in the earnings report that comes out on November 14th. Now, this does not take into account the value of tokenization as a service that is valued through the comparison to the securitized deal. You could also argue and value ETHZilla's investment / digital asset treasury business like you would a regional bank that has assets that it loans out or invests. You would then apply a multiplier to book value. And the book of the company is its $1 billion balance sheet, a post-conversion, fully diluted. So this would give you, once you apply the multiplier, which is a typical multiplier for regional banks of around 1.6 to 1.7, a valuation of roughly $50 to $60 per share. So similar to an earnings multiple approach in this case. However, I don't believe this approach to be correct here because ETHZilla is essentially a tech company with a strong balance sheet and positive cash flow, not only a fund. And it has all of those avenues through which growth will come that wouldn't be accounted if you evaluate this way. But even if you do, you still end up at the same price point, essentially. All of this information, which I have outlined in this video and in previous ones, will become apparent when ETHZilla comes out with its earnings report on November 14th. Provides clear updates on its tokenization plans and status, confirms how many shares it has bought back, and how long it will take to buy back the rest below net asset value. What you need to watch out for primarily in its earnings report is the guidance on revenue and earnings per share. It is more important, as it is what institutions will look at, to value future discounted cash flows and earnings of the business and value the company on an earnings multiple as it should be. This is more important than the Q3 results on revenue and income will show because in Q3 and throughout the start of Q4, ETHZilla was still deploying its Ethereum and deploying its cash into treasury investments and Ethereum into decentralized finance protocols. So they will not have been invested for the majority of Q3 and not for all of Q4. However, in the forecast, it will account for the whole invested Ethereum, and it will give you the correct earnings per share going forward. The second more important part of the earnings is going to be the details of the tokenization business. Have they already made acquisitions of real world assets that they are planning to tokenize, or when are they going to close on them? When will be the first token launch, and what are the details of that launch? Also, what will be interesting to see is how the company plans on building the unit economics against tokenization as a service for third parties and what those economics will look like. Because this is how you can project the future revenue growth as other businesses come in. Now, to sum up, if you were to take anything from this and just watch this, what you should remember is that ETHZilla currently is still trading at a heavy 30%, 35% plus discount to net asset value, even after Ethereum's drop. That discount to net asset value doesn't take into account the value of its investment business or of its tokenization businesses. And eventually, you're going to see the stock trade at a multiple of earnings, not as a multiple to net asset value, because this is not purely a digital asset treasury anymore. Securitize's IPO has put a value on ETHZilla's tokenization infrastructure, which is currently around $10 per share and will rise $10 per share more for every $500 million that it tokenizes. And if you are to take a multiple-based approach or a price to book multiplier approach in valuing ETHZilla today, with no growth, you end up at the same $55 to $60 per share price range. And all of this will be further detailed by the company, and more information provided on earnings, which are a key turning point for ETHZilla and are on November 14th before the market opens.